Hi, how's it going, guys? This is Muftah here again, and we go straight to the chart. From last week, you see this USD CHF pair. We've been calling this pair for like a while. So really, we've just been waiting for it to actually get to our retracement zone, the place where we actually see um, a huge sell coming from. So what happened last week? Let me take you back to how we got to the conclusion. And those of you who have been following from way back, you would see that it's actually trying to play out the way we forecasted it. So first of all, there was a wedge. We all know a wedge is a um, we all know wedges are reversal patterns. So this is a wedge here, and you have a double top also, adjacent the wedge. So basically, this is a double top, and this is a wedge and the double top. I mean, that should give you a good view of what might happen because they are both reversal patterns. And there's a breakout of the wedge. And this is going to be a retest of this wedge at this point here. So the bias on the weekly time frame is bullish, right? So what you want to do before trading is have a bias. So when you have a bias on a bigger time frame, you are able to break out all the noise on the smaller time frame. So when you get to the daily, you see it's making higher highs, higher lows, higher highs, higher lows. So basically, we'll just be looking for. If I was a day trader, I would be looking for intraday buys. But here's the case: I'm a swing trader, so from my point of view, I'll be waiting for a big um, a big sell at a weekly retracement zone or retracement level. Meaning, a swing trader like me, I won't be looking for small price movements like this. If I was, I'll be looking for buys. Even right now, uh, although this is a double top here, and the double top played out. Mm, So hopefully it will continue up to the bigger time frame where we said there was a there might be a retracement. So basically, what we are looking for is this pair to continue up. Yeah, it happens like that. So the smaller time frame usually has a lot of noise. When I say noise, I mean a lot of information. That's why I like to go to the bigger time frame to like cut out all the noise so I can see the charts clearly. So USD I still maintain my bias from last 2 weeks, and patience pays, patience pays. Because I want to wait for a sell doesn't mean I'll be buying it. No, for me, I'm waiting for a sell. I've identified my sell. But for intraday traders, people who have to take a trade in between the day, they have to buy in there. They have to look for a good place to buy. And well, that's for intraday traders, the bias should be bullish. But for swing traders on a weekly time frame, bias should be bearish. Yep. So that's for USD chef, USD card D. So USD card has been playing with us for like a while now, and it's in this zone right here. And on the weekly, you could also see a double top from here onwards. On the weekly, so after double top, we have a little bit of range on the 1 hour time on the weekly time frame. So the pair is in a trading range. So a trading range is a midpoint of highs and lows. That there is no significant high or low in between those points. They are literally the same high and low prices. So the price is ranging, is in a trading range for a while. So to give buyers and sellers buys and sells at the same time, if I'm right. So the weekly bias right now is find that the pairs in the trading range. Over here, you could see a double bottom, uh, and the double bottom held. And when you go back to the daily, you see that the pair is actually, you know, it got to a retracement zone as got to a retracement zone, touched, broke down. After it broke down, it's retesting that zone again. And it looks as if it's gonna come down. Um, although the bias is bearish, but I always like to wait for a very good price to put in my money, so I know I am having a good risk to reward ratio. The Cardi looks like it's going to break down, but to be honest, in my opinion, I think this might just be fake out. To be in my opinion, although if so, what we should be looking at is before you trade, you need to have 2 points of views. What if this happens? If it happens, then what does that mean? But what if it does not happen? What does it mean? So right now, so far as this USD card I'm on the 4 hour chart now. And by the way, I never go past the 4 hour chart. I don't know what's happening on the 1 hour. So for you to be a trader, you need to know the time frames that work for you and go with them. So right now, for me to be in this chart, I would be saying if this price breaks below this 4 hour range, I would consider the sell begin. But as at now, it hasn't broken the range. So I still maintain my bias at this pair, because right now we could see something like a rising wedge. Sorry, a bullish flag kind of forming around here. The bullish flag. So a bullish flag would. So I think from what the chart is saying, from this bullish flag formation, that this might continue up to the top side before the actual sell. But if it breaks this range today to the downside, then I'm sure the sell will begin. But for a swing trader that I am, I'll be waiting for a good sell at this point, because over here I can't really find a good risk to reward ratio for my trades. Fine. So we go to the euro pound. The euro pound, throughout the weeks, it went straight up for like weeks consecutively, and some of us, me included, we got caught. Swing traders got caught in the in the crossfires when we were trying to short the euro pound during the time he was doing all this. But at the end, we finally got our bite of it. Most of us shorted around this side. So now the pound got stronger than the euro, and they dropped the price for like a lot of number of pips you can count when you have your chart. So now there's the pair has got into a retracement zone, and we should see a pullback. Ideally, all other things being equal, it is not a certainty. All other things being equal, right? So when I go to the daily, let's see very well. So I think the pullback, in my opinion, has started because of the bullish bars. You could see that the bears were in control. The red candles are the bears. If you are new to trading, you see that the bear candles are the reds, and there are more. It should tell you that the bears are in control. There are a lot of reds more than green. And right now, the bullish bars are up. You could see the volume on the green candle is more than it's getting more powerful. So it could tell you some bulls are in the market for the euro pound. as always, I wouldn't just buy here because I say, oh, the bulls are here. No, you need to have at least 3 reasons, 2 or 3 reasons to get into a trade. You need to have solid reasons to enter into a trade. Maybe a double top, a double bottom, a retracement, um, uh, a bullish flag, a bearish flag, in addition to some other technical indicators that you may want to use for that for your kind of trading. I have what I use for my kind of trading, and that's a secret to me. I'm not going to share that. But general terms, you should always have more than one reason. You can't just say because the candle is green, I'm going to buy. No, you don't do that. It's a game of probabilities. So you need to have 2 or 3 probabilities, confirming that you're doing this. So if you have the odds on your side, then you can manage your money very well and go into a trade. Understood. So back to euro pound. The euro pound, there's a retracement. Now doesn't mean I'm going to buy at this point. I don't have $1 million to put in at this place. And let me just clarify this. Most people think professional traders don't make losses. We all make losses. A lot of us make losses. But what differentiates us from you, some of the new traders, is we win more than we lose. So if you are losing, for example, let's say we have $5,000 and we are losing $100 to make $300. At every point in the trade, in the trade sessions, we lose $100, but when we win $300. So the ratio of win to lose is high. We are winning more than we lose. But the new B trader loses $300 and wins $100, and basically that's what differentiates the winning traders from the losing traders. So euro pound is to the upside, and I would personally be waiting because of my trading style. I would wait because there's most usually a retracement to the downside. So I will basically wait for this pair to come back down because I've had my confirmation. I will wait. If it takes a day, 3 days, 4 days, I would wait and see if this pair would hold at this bottom. If it holds at the bottom, I'll be fine. I will look for a buy, whatever. Because I have my bias now. I've changed. My bias is bullish. I'm only taking buys on this pair. But in the case of where the low is taken out, right now I'm expecting something like this. But when this low is taken out, I'm out. I'm totally out. I won't think about it twice anymore. And at that point, I'm going to change my bias. So your stop loss should always be below your expectations. Whatever I think is going to happen, you should have a stop loss that will say, okay, no, if the price goes past this point, I wouldn't trade. I'm wrong. My analysis is wrong. So it's all about you knowing when you are right and when you are wrong, and when to cut your losses short. So this is the euro, or the if you have been checking the analysis from way back, you totally understand how this pair has been moving over the time. On the weekly time frame, it's on the weekly time frame, it's in an upward trajectory. Really, it is up, and it's also in a range in the upside. So, and there was a little retracement on the weekly. It went up, giving us the bullish bias. And now this, if you know your candlestick formation very well, you would testify that this is a very good reversal pattern. This indecision and direction candles. And
after the bullish up move, you see that there was a retracement to the upside. Uh, this brought the pair to the this brought the bed down for a while, and if you see, I think the market is open already. The US market is about to open, and that's why the volumes are coming in. So you see, I think there might be a retracement, a little bit of retracement on the to the top side around here. I mean, the pair is bullish, but I will be looking to get in around here. For now, this retracement, I will consider it a little bit of just a little pullback of what happened here. Are we good? So this move will still correct before it actually goes to the bigger time frame demand level. Sorry, the supply level at this higher time frame. So for now, I'll be looking for a very good buy around this place. There might be a buy here because when you identify a bias, a lot of people also identify this bias, and there are people who have enough money to move the price at around any level. So within the bias, the buys can happen at any time. It might so happen that this right now would go to the top side, and that would be all. I won't be able to get in this trade from here, and that's fine. You can't get everything all at a time in the market. You can't get everything. So what's important is you have a plan for yourself. After you get that plan, then you see if the market works that way, fine. But if it doesn't, you don't need to stress yourself. I mean, we don't control the price. We can only plan, in retrospect. And always remember to put your stop loss below your reasons. That will help. Stop loss should be calculated. That's the euro odd. I think the last one is the pound odd. The pound odd got to a very good. If you have been following the analysis for like, I've been following it for a while, you would totally see that the pair is in an upward trajectory. If you look at the last week and the last 2 weeks, you will see how we managed to find this pair. So right now, the pair got to a retracement zone of this move, right? So it broke to the top side, got to a retracement level. Now we're going to see a correction of this whole move. Right now, this is one move. From here to here is one move. So we are going to see a correction, hopefully to this downside. But for it to get to this downside, there would be something like this. There might be something like this before, like this. So what I will be doing is, although the pair is going to the very, very top side, I would be waiting for a good retracement to sell this pair from. For example, I might be waiting around this place to get in to sell. And I'll be considering other factors. I won't just be, because I said I'll be waiting for a retracement, doesn't mean when it gets here I'll just enter. You have to find other confirmations, like I said, to your trade before you enter. You just don't enter blindly. Usually I like to wait for people to get in before me. How do I know that people have gotten in? When the volumes start coming in my own direction, then I know that it's about time for me to get in. So I usually wait for volumes to increase to some significant level before I get in. So I wait for a retracement to have a good risk to reward ratio, risk reward. But if it doesn't come to my level and it continues down, fine. So basically I have two ways of trading this pair at the moment. I've identified that on a shorter time frame, the pair is going down. There's going to be a retracement in the downside. So I wait for a retracement to short. However, if it comes down, my bullish bias still remains very, very intact. And I'll be looking to buy from this level onwards. So guys, I think that marks our trading for this week. If you have any questions, just ask. And if you enjoy the video and you find it helpful, just hit the subscribe button down there and you get more stuff. And I hope you guys have checked out the trading psychology lessons. There are links below the description. You can, if you wish to join any of our classes, you can just sign up below. Just leave a comment. And follow our pages too. OFGBFX, Facebook, Instagram, and the website too is up, ofgbfx.com. You can find a lot of blogs. I write a lot of blogs on there, so you can find a lot of good information. ofgbfx.com. All right, guys. I think that's analysis for the week, and have a good one, guys.